We will see about GST, that is Goods and Services Tax. This is useful for AO examination and PS Group B examination. GST is all about one nation, one tax and one market. People often say that it is difficult to understand the two topics, WIFE and GST. I am no expert in handling the first topic. Better I confine to the second topic, GST. And in this video, you will learn about what is GST, what is GSTIN, what is GSTN, what is Input GST, what is Output GST, what are CGSTs, SGST, IGST, UTGST, what are the differences among them, how many slabs are there in GST, how is GST billing done, and GST on Intra-State Transactions, how are GST imposed on Interstate Transactions, and how do you offset the GST input tax credit, that is ITC, and output tax liability. What is the role of GST Council? All these things you will know, and you will be very clear about these topics. Let us start. First, you all know that when you speak about taxes, the government generally levy taxes on the citizens to run over the so many others, to provide many services like army, navy, air force, to make you secure in the nation, and also to provide the infrastructure in infrastructure development, like roads and all these railways and all these things. And taxes are two types. First one is the direct taxes, that is directly from the persons, and the second one is the indirect taxes. And generally the direct taxes, they depend on the capacity of earning, and like income tax, corporate tax, property tax. These are all direct taxes from the persons. That means you pay the taxes to the government directly on your own. There is a second element that is called indirect tax. Whenever you go for purchases or sales, you are supposed to pay tax. These are called indirect taxes, that is service tax, VAT tax, excise duty, entertainment tax, sales tax, luxury tax. All these taxes are there. And based on these different taxes, the foreign country MNC companies, they find it difficult because their taxes are not uniform in all states, and they find it difficult to do their businesses also. So the government has thought of reducing the number of taxes that are imposed indirectly on the public, and they have summarized and they have withdrawn 17 types of different indirect taxes and replaced them with the single tax called GST, that is Goods and Services Tax. Earlier we used to have the centralized excise duty, additional duties of excise, excise duty levied on Medicinal and Toiletry Preparation Act, additional duties of customs, that is CVD, and SAD, that is special additional duty, service tax, service and surcharges and cesses. There are also state taxes, that is state VAT, sales tax, central tax, purchase tax, entertainment tax, other than the local body tax, local bodies that are levied by local bodies, luxury tax, entry tax, taxes on lottery, betting, gambling, and surcharges and cesses. All these taxes have been clubbed together and they have made into one single aspect, that is called GST. They have clubbed and they have made it as single component, that is GST. Constitution amended to provide concurrent powers to both center and states to levy GST. Earlier, center used to have the tax on the sales of goods and states to tax the provision of the services. So they have been combined now. So the tax has now become a single component. However, you find that GST has become the indirect tax, one nation, one tax, and only indirect taxes are subsumed in the GST. Still we have to pay the direct taxes like income tax, corporation tax, inheritance tax, gift tax, and wealth taxes. These are all levied on the individuals, whereas indirect taxes are levied indirectly when you buy something or some goods or services. So indirect taxes are various types we have seen here, and they have been subsumed into one single tax called GST. And GST is of three types. One is CGST, second one is SGST, third one is IGST. Here you find that SGST or UTGST. CGST is nothing but central government goods and services tax. SGST is the state government's goods and services tax. UTGST is union territory goods and services tax. IGST is the integrated goods and services tax. Now we will see who has to go for registration of goods and services tax. There are three components, major components, who has to go for registration under GST Act. The first one is the threshold limit of turnover. If it exceeds 20 lakhs, you have to go for a registration of goods and under goods and services registration. And second point is that interstate transactions, even though they are of 1 rupee also, you may if the supply is taxable, then interstate transactions should such interest rate in those who are those who do these interstate transactions, they have to go for registration of compulsory go for the registration of GST. And one more point is online transaction operators. All the online transaction operators, irrespective of the amount, they have to go for the registration of GST. So these are the three conditions that are levied there. However, for the threshold limit in certain northeastern states, it is 10 restricted to 10 lakhs only. Here for other states it is 20 lakhs. And as far as there are three components I have told. The fourth component is UTGST. Central government, CGST is central government, that is the tax imposed by central government, it is called CGST. Tax imposed by state government, it is called SGST. And if it is by union territory, the tax imposed is called UTGST. And what is IGST is integrated goods and services tax. This comes into picture only when there is a transaction between two different states, that is state to state or state to union territory or union to state or state to union. So whenever there is a change in the jurisdiction in the purchases and sale, in such a case IGST is imposed instead of CGST and SGST. Okay. If the transactions are within the state, then there will be two components, that is CGST and SGST will be imposed. CGST plus SGST will be imposed when the transactions are between two states. That means if you purchase one good from Telangana and if you sell it in Maharashtra, it is an interstate transaction and you may have to pay the IGST instead of SGST plus CGST. And see, for example, if you find here this there is one transaction from Maharashtra to Vijayawada, that is the two interstate transactions. So here interstate transactions, you will pay the IGST instead of SGST plus SGST plus CGST. See, within the state you have to pay CGST plus SGST. This, if the percentage is 18%, you may have to pay 9% CGST and 9% SGST. People used to think that there are four components and 18% of CGST, 18% of SGST, 18% of IGST I may have to pay, and they are worried about it. But it is not like that. Only if the total percentage is 18, CGST will be 9%, SGST will be 9, and within the union territory there will be CGST plus UTGST will be imposed. If the percentage is total is 18, CGST will be 9 and UTGST will be 9%. That means equally shared. If the percentage is 5, it will be equally distributed, 2.5 CGST and 2.5 SGST, like that. And the state to union territory or state to union territory, state to state or union territory to state, then IGST will come into picture. If there is a transaction between a Bangalore and Mangalore within the Karnataka state or Vijayawada and Tirupati within the Andhra Pradesh state, then only then you will find only CGST plus SGST in the bill. Whereas if the transaction is between two different states, say Delhi and Hyderabad, then comes into picture the IGST. We will go deep into the topic later. And here one more important point about IGST is here this GST is called a destination based tax. Whenever there is a transaction within the state, that is called intra-state transactions, we call it as intrastate. That means Vijayawada, Tirupati or Pune, Mumbai within the state. If they are, the transaction is within the state, these are called intra-transactions, intrastate transactions, and their CGST plus SGST is levied. And if the manufacturer is from the state, he will be benefited by getting the state in which the manufacturing happens will also be benefited by getting the employment, and the tax also goes to the same state if it is a intrastate transaction, and CGST will be levied, that goes to the central government. SGST will be levied, that goes to the state government. Whereas whenever the transaction happens between two different states, then the imposition of IGST comes into play, and this IGST will generally go to the destination state. Say for example, if there is a one laptop is sold from Maharashtra to Vijayawada, that is in AP, Maharashtra, in Mumbai, from Mumbai to Vijayawada, if one laptop is sold, in this transaction, the IGST will be imposed, and the IGST, it will be divided into two shares. One share it will go normally to the central government, and the second share will go to the destined state. That means it will go to the tax that is collected in Maharashtra at the time of transaction will go to the Vijayawada, that is AP state. So the Maharashtra people, they feel bad about it because they have undertaken the sale, but they are not getting the tax gain. Here you should understand that these taxes are levied and they are based on destination tax. That means wherever the article goes and wherever the good goes and consumes, the tax will go to the consumer state. That means wherever the state in which consumption happens, the tax will go to the concerned state. In IGST, this happens. This IGST will be going to the consumption state. So even though the manufacturing had happened in Maharashtra, that laptop has been manufactured in Maharashtra, but it has been consumed by AP. So the AP will get the share of the IGST from the central government. Whenever the IGST is collected, that it goes directly to the central government, then it takes its own share, and the remaining part it will transfer it to the destination or consuming state. So this is why it is called, GST is called destination based tax. So the final destination point only tax will be collected. So here you may ask what is the benefit for Maharashtra in this transaction. Maharashtra got its equal share by getting the employment, by getting the manufacturing done in Maharashtra. They are getting the employment. What is the benefit for AP? They got the tax component because of consumption. So every state is equally growing in this concept of GST, and every GST registered owner has certain obligations. These obligations include timely filing of returns, timely payment of taxes, proper maintenance of purchase and sales details, and subjection to the periodic audits, and needs to display the GSTIN on their invoice also. And what are the registration? We have seen now the obligations. What are the benefits? They have the ability to collect the taxes and pay to the government, and they can claim the input tax and pass on the input tax credit to the next entity. So this is all about the interstate and intrastate transactions, and you can see here what is GSTIN. GSTIN is an integrated common number, that is 15-digit number. You can find it on the transaction bills also. Already we have seen that in the bill also you have to note down the GSTIN, and see here you find the bill, some parata they have taken, and some CGST 9% is there, SGST 9% is there. That is within the state this transaction has happened. So that bill is this is a bill within the state, that is intrastate. And the right hand side you find one more bill here, that is here you find IGST directly 18%, here 9% you have seen here directly only IGST is imposed 18%, 1,18,000 it is the IGST imposed. So this is an interstate transaction. That means a transaction between two different states, then IGST comes into picture. This IGST will directly go to the central government, and the central government distributes it, takes its own share, Central government will have its laddu on its both hands, and it will distribute the remaining thing to the state government, which is where it is consumed. This is all about GSTIN, and GSTIN number will be having 15 digits, and the first two digits will be the state code. We have 28 states, and each state will have a code. That code will be noted here, and this is the PAN number of the entity, and the last three digits will be a random numbers, like entity number of the same PAN holder in the state, or alphabet Z by default, and check numbers, check some digits. So this is all about GSTIN. This number will be used at the time of filing the returns also under GST. And here you find the different. Now let us see the GST slab system. There are 4 or 5 slabs here. 0 is no tax or no GST. There are certain entities for which there is 0 tax, and there are certain entities for which 5% tax is there. Whenever you collect 5% as GST, it will be divided into two parts. One is 2.5% CGST, and 2.5% it will go to the SGST, half. And if it is 12%, 6% will be CGST, 6% will be SGST, and there is also 18% also GST collected, and in such a case 9% will be CGST, 9% will be SGST. If 28% is collected, 14% will be CGST and 14% SGST. So there are almost 1211 goods and services that are brought under this different slabs. The maximum goods come under 0 to 18%, which are required for common man, and the luxury items are put in the 28% slab. Now we can see the different slabs under CGST. However, there are some exceptions which are outside the CGST also, outside the GST also, and these goods does not include money and securities. Here you should understand, and examination point of view, you should know that goods does not include money and securities. And these exceptions that are there are some goods and services that are outside GST. That means GST will not be collected. As usual, the other service taxes and other taxes imposed by state and central government continues in these aspects. One is alcohol for human consumption. On that, GST is not imposed. The power to tax remains with the state. That is because that being the major part of the revenue for the state governments also, they have not accepted to include this part in the GST. And the state governments, they are compensated with up to a period of 5 years because they are losing the major portion of the revenue through by replacement of different taxes that they impose on people by GST. And petroleum also, there are 5 petroleum products: crude oil, diesel, petrol, natural gas, and ATF. ATF means aviation turbine fuel. That is the motor spirit, high speed diesel. All these things these are exempted from GST. GST Council is there. That is the governing body that will decide what is the tax that is to be imposed, what is the percentage that should be there, what are the different slabs, and all these things will be decided by the GST Council. We will learn detail at a later stage. They will decide the date from which GST will be applicable for these petroleum products. As of now, they are outside the GST. And one more point is tobacco. Tobacco is also outside the GST, part of the GST, but power to levy additional excise duty with the central government. So it is part of GST, but some of the additional excise duty also the central government can levy. One more aspect that is outside GST is entertainment tax levied by the local bodies. So entertainment tax that is levied by the local bodies is also outside GST. Power to tax remains with the state. And there are also 5 entities you may have to remember for the examination point of view. That is basic customs duty, the BCD, is also outside GST. And stamp duty for registration of property, it is also outside GST. Road tax and vehicle tax is also outside GST. Electricity bills also, you don't find any GST component in the electricity bill you receive. You just check up at your home. That is also outside GST. And entry taxes and toll taxes, they are also outside GST. So altogether there are some 10 components that lie outside GST. You may have to remember as far as the examination point of view is concerned. They may give in the MCQs or any other questions also. They take a screenshot. Now coming into the different goods and services tax slab system, there are certain items for which zero tax is limit is imposed. Essential items like milk, eggs, cereals. 5% is imposed on sugar, spices, and tea. On computers, it is 12%. Processed food also it is 12%. School bags it is 18%. Air conditioners and luxury items it is 28%. So in detail, I have presented before you the different things. Some are completely exempted like food grains, milk, eggs, curd, unpacked paneer and natural honey, vegetables, atta, basin, maida, oil and common salt and bitter leaves, cane jaggery. These are all exempt from GDS, from the GST, that is 0% is levied. So different things are there. Those luxury items like motorcycles, cars and those hair dyes and explosives and pan masala, all these things are imposed with 28% GST. And now we come to the part why GST, the cascading effect of pre-GST. So previously there are four types of persons that are involved in a transaction. That is the manufacturer, one who manufactures the goods, and there will be a distributor who will take the goods from the manufacturer and he will distribute it, and the distributor will give it to the retailer and the retailer will sell it to the customer. So these are the four different persons available for us to compare the cascading effect of the pre-GST. Previously, the manufacturer used to produce one good, and for that if the cost is 50 rupees, he used to add the 50 rupees as his profit, and he would impose 10%. Say for example 10% is not in the slab of GST. For easy and convenient understanding, I have given here as 10%, and 10% tax it is to be levied, and the total used to come to 110 rupees. Under GST now 50 rupees is the manufacturer will be, production cost is 50, the profit is 50, and tax will be imposed on the profit, and the total is 105. The distributor 110 rupees he will on the 110 rupees he will also add some profit 20 rupees, 10% tax will be imposed, 143 will be the pre-GST model, and if it is GST 110 rupees he is getting from here it is 105 only, and 20 rupees it will be added and it comes to somewhere less than 127. And here the retailer he will also add some tax for some profit here 20% and 10% tax 179, and this 127 comes here and 20% he adds as profit, 10% on the 20% only, it comes to 149. Finally, in the pre-GST model 179 it used to cost for the customer, and in the GST model it comes to 149 only. So this is called cascading effect. And tax on tax, here you find tax on tax, you don't find tax on tax. However, this is just to understand only, it is not exactly like this, and how this input tax and all these things I will tell you later. This is to merely make you understand, but it is not exactly like this. You will come to know in the later in this video. Now coming to the part of benefits of GST. Here, whenever the GST is imposed by subsuming some 17 types of indirect taxes and 23 types of cesses, here the reduction in cascading of taxes is there. That is the decrease in inflation. Overall reduction in prices is there, and common national market it is there. Ease of doing business is there for those MNCs who are willing to do business in the country. They may find difficulty if the one state imposes less tax, another state imposes more tax. For example, in Gujarat they may impose less tax when compared to UP. Generally, then what happens is that if the pre-GST condition I am telling, what happens is that the MNCs generally they flow from UP to Gujarat where the tax is less, and the businesses flourish in Gujarat when compared to UP because the tax imposition is less in Gujarat. The manufacturing companies tend to move to the Gujarat. So similarly, the MNCs also feel it difficult to do their business throughout the country, and they may go to the China or the other ways where the tax is common in all locations. That is why government has taken initiative to implement GST in the state in the country as a whole, so that the common national market will be there, and the benefits for the taxpayers also, and self-regulating tax system is also involved, and no intrusive electronic tax system, decreases in the black transactions also, and simplified tax regime, more informed consumer, and reduction in multiplicity of taxes. There are multiple taxes earlier, octroi tax, all these taxes are there. Now it is only single GST as far as the indirect taxes are concerned, and it is also based on the consumption based taxes. Earlier many states you use it to get only those states where the industries are there, they used to get the tax benefit. The governments, they used to get good revenue in taxes. But even though the laptop that is manufactured in Gujarat is consumed in Andhra Pradesh or Telangana or Hyderabad, these states where they are consuming, they don't used to get any tax collection earlier. Now with the advent of GST, these states where the consumption is high, they are benefited with the GST, and equally every state will progress now. So this is the how the GST is implemented. Abolition of CSTs, exports to be zero rated, and protection of domestic industry also it is there. Make in India concept is progressed, and the poorer states will also gain by GST in terms of IGST imposition whenever the transaction happens between two states. So finally here you find that one foreign territory is there. I mean, whenever there are imports from one foreign country to any state, then IGST will be levied, even though it is from state to state, and other countries also generally it will IGST will be imposed. And the destination tax, it is GST, so the destination state will be benefited with the tax. And here CGST, SGST within the state, from another state, one state to state, it is IGST. From one state to a union territory, it is IGST. From foreign territory to union territory, it is IGST. If it is within the union territory, it is CGST plus UTGST. Within the state, CGST plus UTGST. Within the state, it is CGST plus UTGST. One more point is that whenever there is a whenever you do a purchase transaction, you may have to, whenever you purchase something, you have to pay GST. That means you are paying something to the government as tax. At that time, whenever you make a sale, that means whenever you sell something, you will you will collect the GST from the other person. So this is important concept. Whenever you sell something, whatever you get, you collect the GST. Whenever you purchase something, you will pay GST. These two items you should understand clearly. And IGST credit can be used for payment of IGST first, then comes CGST, then comes the STGST and UTGST in that order. Regarding this aspect, I will clearly mention you with 5 examples. Stay tuned till the end. And here for the examination purpose, there are key dates for GST implementation. GST bill passed in Rajya Sabha on 3/8/2016. GST bill passed in Lok Sabha on 8/8/2016. And GST bill has been signed by the President of India and has become act on 8/9/2016. And GST Council has been formed on the date 12/9/2016. And finally GST has been implemented in Pan India on 1/7/2017. That is why that it is called a GST day on 1st of July. Okay, this you have to remember. Take a screenshot, and I will tell you the important points that everyone should know as far as GST is concerned. One by one, these are very important for your examination. GST was first introduced in the world in France in 1954, and India follows the GST model, dual model. It is called dual model, and that is from Canada. That model is from Canada. And GST was implemented in Pan India, as we have seen, on 1/7/2017. The first Indian state to implement GST is Assam, and the last state to implement GST is Jammu and Kashmir. GST was recommended by Kelkar Task Force. You have to remember his name, Kelkar. And GST has replaced 17 types of indirect taxes and 23 cesses. And GST bill was first introduced as a constitutional 122nd amendment bill CAB in 2014. This 122nd amendment bill, this is bill, you should understand, this is not act. And GST bill was introduced by 101 Constitutional Amendment Act in 2016. Here you may find this is the bill. This is the bill, this is the act. Whenever the bill is passed and signed by, assented by the President of India, then it comes an act. And you may find here 122 is the number of the bill. There will be bills, bill 1, 2, 3 and so on. But you should understand that every bill will not be passed into act. There will be some failures also in the middle. So the bill numbers will be more than the act numbers. So suppose if the 1 is there, that will become act sometimes, and that is called 100. And this may fail, the second one may fail, third one also may fail, the fourth one may become an act, then this comes to 101. So that is why here 122nd bill and 101 act. I think you understood. And IGST under Constitutional Amendment Act 269A. This also you may have to remember. And GST Council is a constitutional body under Article 279A. 269 is IGST and 279 is GST Council. And GST Council has 33 members, including the first one finance minister from the union government, and the second minister of state from the union government, and 28 state finance ministers and 3 union territories. Okay, we will learn in detail in a while. And if you do not file the returns thrice every month as GST, you may be sent to jail for a period of 5 years also. Okay, that is the upper limit. And GST day is celebrated on 1st of July every year. GSTIN is a 15-digit number, as we have seen. GSTIN input tax, it is imposed, it is that GST on purchases. Whenever you purchase something, you have to pay GST tax, GST as a tax, and that is called input tax. This will be remaining as credit. That means if you purchase 100 rupees good from a person, you are taxed with 10% of GST. In such a case, this 10 rupees of tax that you are paying is the tax that you are paying, and it will be as input tax credit for you. That means this 10 rupees you can claim at a later stage whenever you are selling some other good. That means, say suppose you have purchased a laptop now and you are selling a fridge from your company, and in that while you sell that 100 rupees item, you get some 20 rupees as tax from the others. You can adjust this 10 rupees and you can pay only remaining 10 rupees to the government. So whatever you are paying in the earlier transaction, you can adjust in the future sales as input tax credit. That is called input tax credit. That means some credit will be there whenever you pay tax, that can be claimed at a later stage at the time of some sales in the same company. Okay. Then GST output tax. GST output tax is nothing but the GST on sales. Whenever you sell something, that tax will be, you will collect tax from the other side. That is called GST output tax. That is a liability to the government. You are collecting some tax, means you have to pay to the government. That is called liability. And input tax means that you are paying some tax. That means you are paying to the tax to the government. That means you are having some credit with the government that you can encash at the time of sales, that is output, that can be adjusted. Finally, remaining thing only you will pay. We will learn detail at a later stage. GST payable is equal to input GST minus output GST. That is called input tax credit. So what is input tax credit means? That is the GST payable means input GST minus output GST. That will come to the ITC. And reverse charge in GST. There is also one item called RCM, reverse charge in GST. Normally, if the seller collects the GST from buyer and pays to the government, Generally, it will pay to the government. However, in some cases, if a buyer pays to the government directly to the government, in such a case, it is called RCM. Legal consultancy examples are legal consultancy, goods transport agency, renting of land by government to industrial estates. These things directly you have to pay the tax. Nobody will collect from you. You only have to pay directly to the government. Then such a case is called reverse charge. Okay, these are the different concepts and important points from of GST. And regarding the GST Council, there is a composition, as we have seen, it is under Article 279A of the Constitution. GST Council has been formed, and there will be a chairperson. As I have told, it is Union Finance Minister will be there. As of now, Nirmala Sitharaman will be the chairman of the GST Council, and vice chairman also will be there, who will be chosen among the ministers of the state government, and the members of state finance in the central government. He will be the another member, and all the ministers of the finance and taxation of each state will also be the remaining members. And there will be a quorum out of these 33 members. If 50% of the total members are there, then the that council is said to have the minimum required number for conducting a business. And one finance minister, one state minister of the state union minister, I mean to say, 28 states finance ministers will be there, and 3 union territories. What are those 3 union territories? Where that Vidhan Sabha is there, that union territories only will be forming a part of the council, and not all the other union territories. What are those 3? Delhi, Pondicherry and J&K, they have the Vidhan Sabha. And states, they have the 2/3 weightage, and center will have 1/3 weightage. And decision, if any decision that has to be taken in the GST Council level, then 75% of the majority will be taken into consideration. That means 3/4 majority on consensus among the members by 3/4 majority, then only it will become the bill. Council to make recommendations on everything related to GST, including the laws, rules and rates. They will take a decision. This council will take, and 3/4 majority is necessary to finalize the decision. So take a screenshot. And now we have come to the important point of 2 types of transactions, as we have seen. I will clearly explain. Please keep your eyes and ears open so that you can understand the concept of GST first. Intrastate transactions we will understand first. Within the state, how these transactions happen. That is dual GST within the state. Working example now. Say suppose there is a one timber maker. That means one who makes logs and he will sell it to the furniture maker, like chairs or tables he will make. The furniture maker will make a table or chairs. That is when he brings timber from the timber maker, the furniture maker will make chairs and he will sell it to the furniture retailer, and finally it will be taken by this table or chair that he makes, that he purchases from the furniture maker by the furniture retailer. It will be sold to the final consumer, who will take to his home. This is the cycle. And here the transaction, these entire transactions are happening within the state. Say for example Andhra Pradesh or Telangana, whatever it is. Here the first transaction that had happened, let us see. The timber maker, he will sell the logs, that wood, to the furniture maker first. That means in his tax invoice, the timber maker, he will prepare one tax invoice called A, that is a transaction A between the timber maker and furniture maker. The goods, that log will cost 100 rupees, and 100 rupees he will charge SGS. For example, the SGST and CGST, they are 10% each. Say for example, though such 10% slab is not available, as we have seen earlier. However, for your convenience, I have taken the example as 10%. The cost of good is 100 rupees, and the 10% is SGST, 10% is CGST. Total is 120 rupees bill he has given to the furniture maker. So the timber maker has collected 20 rupees as a tax from the furniture maker. So this 20 rupees, what he has to do, the timber maker has to give 10 rupees CGS to the central government, and he has to pay the 10 rupees to the state government. So whatever tax he has collected, he is paying directly to the state government and the central government respectively. As far as in tax of invoice of A, it is over. He has paid the tax and he has paid the tax and he has collected the tax and he has remitted to the central government and state government respectively. Now coming into the furniture maker, he has purchased goods for how much rupees? 120 rupees, and he has added some 80 rupees as profit and he has sold it to the furniture retailer. So the total amount is 120 plus 80 rupees as profit, 200 rupees, and there is a tax on SGST 20 rupees 10% and CGST 20%. Total is 240 rupees. That means what is the amount that the furniture retailer paid? The furniture retailer has paid 240 rupees to the furniture maker this time, and he has purchased the goods for 240 rupees. The timber maker has sold it for 120 rupees. The furniture maker has sold it for 240 rupees. And the furniture retailer, he has added his own profit from 200 to 200 plus 100 he made profit and he has sold it to 300 and 10% of GST 30 rupees CGST, that is 360 rupees he sold it to the final customer. Now coming into the tax aspects, please listen carefully. In the first case, this customer, final customer, he will pay this 60 rupees as tax. This 60 rupees who will pay? The final customer will pay. And you may think that this by GST there is so much of tax collection involved here. However, what happens is that do you think that this governments they are getting 10 plus 20 plus 30 as SGST and CGST 10 plus 20 plus 30? No. Then how adjustments are made? We will see. Well, the government what it gets only the 30 plus 30, that is SGST 30 will go to state government. What is collected finally only will go. The remaining these two invoices, whatever that is collected and paid, they will be adjusted. How they will be adjusted? We will see. So first timber maker has sold some good for 120 rupees and he has collected tax 10 plus 10 that he will pay directly to the government, already we have seen. And as far as the furniture maker is concerned, he has paid 120 rupees. So he had paid 10 rupees and 10 rupees as tax already. And there is another transaction that furniture maker made. What is the transaction? Earlier this is a purchase transaction where he has already paid tax, that is 20 rupees he has paid tax. That means he had paid tax 20. And here he has sold something. He has sold to the furniture retailer and he has collected tax. How much he has collected? 40 he has collected and he has paid 20. So how much he has to pay to the government? 20 rupees he has to pay to the government. Because he has collected 40 rupees from the furniture retailer, this furniture maker has collected 40 rupees from the furniture retailer. However, he has paid already 20 rupees to the government. So only 20 rupees out of 40 minus 20 only he will pay to the government. That means here when you come to the bifurcation, here he has collected SGST 20 rupees. So 20 rupees minus input tax credit, ITC they call, that is already he has paid SGST 10 rupees. That is the credit in his thing. So this 10 rupees is called input tax credit, that is already paid to someone else at the time of purchase. That will be adjusted, this 10 rupees will be adjusted at the time of collection of tax, collection of this 20 rupees, collection of tax from other person at the time of sale. So from purchase he has paid and from the sale he has collected. So the collection minus payment, that means 10 rupees he has to pay. Similarly CGST also 20 rupees he has collected but he has paid only 10. The remaining 10 only he will pay to the government. So the government will not get this 10 and this 20. It will be adjusted by the transactions that are happening one by one. So this person, he will pay only 10 rupees and 10 rupees as CGST and SGST respectively. And with the next transaction, there is a tax invoice C. The furniture retailer, how much he will pay? He has collected 60 rupees. He has collected 60 rupees from the customer. And he has to pay to the government. If he doesn't pay, already you have seen 5 years jail. So what he has to do? He has to pay, he has to deduct whatever he has paid earlier in the transaction from the collected amount. So earlier what he has paid 40 rupees. Out of 60, the 40 he will subtract and 20 rupees he will pay to the government. So in this transaction, the furniture retailer is paying 20. Here also is paying 20. And here the first timber depot 20. Total it is 20 plus 20 plus 20, 60. And whatever the final one is paying also, that is 60 only. So this is how the GST transfers. And in detail, if you go, outward you can see that is 60 minus 40 is 20. And if 30 is the CGST collected, so that 30 is the CGST collected, so 20 rupees is the input tax already he has paid in the earlier transaction, that can be claimed now. So 30 minus 20, it is 10 only you will pay. And as far as SGST is concerned, he has collected 30 rupees. However, in the last transaction, he has paid 20 rupees as SGST already, so he need not pay it again. He will subtract that 20 from 30 and 10 rupees will be paid finally to the government. So this 20 rupees, whatever is that he has paid earlier, that he is claiming now, it is called input tax credit. So here in this transaction for furniture maker, he will be claiming input tax credit of SGST 10 and CGST 10 at the time of sale in this transaction. Similarly, in the C transaction also he will claim. Finally, the government will get the 60 rupees only, and meantime these people, in the whole number of, this is one single transaction I have told, there may be multiple transactions also, there will be multiple purchases, there will be multiple sales also. In such a circumstance also, the business firm or the organization will take all these transactions into count. All these input tax credits will be claimed at a subsequent sale. Input tax claims, input tax credits will be, you will be getting input tax credit whenever you pay tax to the government, and this tax to the government paid will be adjusted in the future transactions of sale. That means purchase transactions will be adjusted to the sale transactions in the future. This is all about the intrastate transactions within the state. Next one is the interstate transactions, that is between the two states or two union territories, or one state and one union territory, or one union territory and one state, between the two different states. That is called IGST model. Whenever there is a transaction between two states, two union territories, or one state to union territory, IGST will come into picture. Working model of IGST example we will see. The same example, the timber maker, 100 rupees 120, again he has made 200 rupees 40, 240, 360, and the same furniture retailer, final consumer, the same concept, but there is one difference, that is here the timber maker and furniture maker, they belong to one state. For example, there is a state border here, these two belong to another state. Say it is this is Maharashtra, this is AP. For example, this is Maharashtra and this is AP, for example. So, and the timber maker, whenever he sells the goods for 100 rupees, tax will be imposed 10 rupees, 120. CGST will within, because the transaction is within the state, so CGST plus SGST will come into picture. So 100 plus 10 plus 10, 120 rupees. The furniture maker will make this 120 rupees to the timber maker, and the timber maker will collect the 10 rupees he has collected. He should not retain with him, otherwise 5 years jail. So he will credit it to the SGST 10 rupees to the state government and CGST to the central government. And the furniture maker will make another transaction with the furniture retailer. He will sell this chair or table to the furniture retailer, and he will add he will purchase it for 120 rupees and he will sell it for 200 plus IGST will come here. That means 120 plus 80 rupees as profit he added, and 200 he is selling, and IGST 20%, say suppose CGST is 10%, IGST will be 20%, say for example. IGST will be union of state and central government tax will be there. Total tax will be IGST, it will be imposed, and within the state means CGST and SGST will come. Whenever there is a transaction between two states, IGST comes into picture, and so that will be full, it will be imposed as IGST, and the central government will take it and then distribute it to the destination state later. So here it will collect first 20%, that is 240 rupees it will collect from the furniture retailer, and as he has collected 40 rupees from the furniture retailer, what he has to do, he has paid some 20 rupees here, he has collected 40, he has paid 20. So what amount he has to pay? He has to pay 20 rupees to the government as IGST. So here see IGST is 40 rupees already collected here, and for this is in case of furniture maker, the adjustment particulars. What he has collected already, IGST has collected 40, already has paid ITC as a CGST has paid 10 rupees and SGST ITC has 10 rupees he has paid. So that 20 rupees will be subtracted and he has to pay IGST 20 rupees only he will pay. This is adjustment of furniture maker. Then further going to the next transaction, invoice C is given, and the furniture retailer has has brought these goods for 240 rupees from the furniture maker, and he has sold it for 300 rupees to the final consumer. So tax will be 30 rupees 10%, CGST will be imposed 10%, CGST SGST will be imposed, so 360 will be imposed, 360 rupees the final customer will pay. And now that the furniture retailer has collected 60 rupees as tax from the customer, he has to pay 60 rupees to the government. However, he will adjust something and then only will pay to the government. What he will adjust? Already he has paid 40 rupees in this 240 transaction to the furniture maker. That 40 rupees he will deduct. He has paid 60 rupees. He has collected 60 rupees. He has paid 40 rupees. In this transaction he has paid 40, he has collected 60 here. So the remaining 20 only he will pay. Let us go in detail regarding the CGST and IGST, then you will come to understand. There are two components here. IGST should be adjusted for CGST and SGST now here, because this state has to get some revenue. This is the destination tax. Whenever this IGST is coming, this will not be going to the state X, that is Maharashtra, it will go to the state Y, that is AP only. So as first, whenever there is an IGST, the IGST will be first adjusted, that input tax credit received on IGST will be adjusted in IGST only first. If there is no IGST, in this case there is no IGST, that is to be adjusted. So that can be that is there for output tax. There is no output tax as IGST. There is only SGST and CGST that is there for adjustment in IGST. IGST should be adjusted first to the IGST. IGST should then be, second priority will be given to CGST adjustment. Third priority will be given to SGST adjustment of the ITC, that is the input tax credit. So here the input tax credit is 40 rupees. So the 40 rupees that is collected will be adjusted against this 60 rupees as follows. The first is the payment of CGST and the payment of SGST will come into picture. In CGST, because this is an interstate transaction between the furniture retailer and final consumer, first the 60 rupees, 30 rupees is there CGST, 30 rupees is SGST. Already this CG and under IGST, he has collected some 40 rupees. Out of this 40, 30 will be first adjusted in CGST. As I have told, CGST will be preference will be given to CGST first. Out of this 40 rupees, 30 rupees will be adjusted here. So the CGST to be paid is 30 minus 30, 0. And SGST, you are having out of 40, 30 is gone. 10 rupees is remaining. The 10 rupees will be adjusted for SGST. The remaining amount paid is 20 rupees SGST. Already we have seen 60 rupees he has collected, 40 he has paid already, 20 rupees is remaining. That 20 rupees will be paid as SGST. I hope you understand. This is how the final adjustments will make. So you can understand that though the manufacturer is here in the state X, the state Y will get the GST component. So this is all about the GST transactions, interstate transactions. I hope you understood. If you have any doubt, please post in the comment section. Now coming into GSTN, already we have seen GSTIN, that is the identification number, 15-digit one, including PAN number in it. Now GSTN means the goods and services tax network is there. To operate, it has been set up by the government as a private company under erstwhile section 25 of the Companies Act 1956. GSTN, what is the role of GSTN? It would provide three front-end services, three things they will provide to the taxpayers. One is the registration. You can go and directly register in the GSTN, that is network, and you can pay the tax in that website, and you can file the return also. So registration, payments and return filing also you can do in GSTN network. And besides providing these services to the taxpayers, GSTN would be developing back-end IT modules for 28 states who have opted for the same. So all these states also IT modules also it will provide. Infosys has been appointed as the managed service provider MSP for GSTN. This network is huge. It will allow for registration, it will allow for payment, it will allow you to file the GST returns also. And you often listen about the GST composition scheme. People tend to say, I have composition scheme in some small businesses. This composition scheme has been formulated for small businessmen being supplier of goods and supplier of restaurant services. And under this scheme, the person up to turnover of 1.5 crores and 75 lakhs in case of some states like Manipur, Mizoram, Nagaland, Tripura, Arunachal Pradesh, Meghalaya, Sikkim and Uttarakhand. In such a case, it is 75 lakhs only, that is the threshold limit. They have to pay the tax equal to 1 to 5% on his turnover, and needs to file his returns annually with quarterly payment from financial year 1920. And this is helpful for the small businessman. They need not file returns every 3 months, thrice in a month. Usually thrice in a month GST has to be paid. Adjustments, after making the adjustments of input tax credit, one has to pay the GST to the government and he should not retain with them so long. And composition scheme has also been formulated for suppliers of services to those who are not eligible for presently available composition scheme also. Under this scheme, the person has up with a turnover up to 50 lakhs also. Earlier we have seen 1.5 crore and 75 lakhs for different states. Here in this case, 50 lakhs for 50 lakhs they have to pay a tax equal to 6%. Earlier we have seen it is 1 to 5%. Whenever this has been reduced to 50 lakhs, it has come to 6% on his turnover and needs to file his returns annually. He can file the returns annually with a quarterly payment. Payment should be made quarterly. Okay, from the year 1920. This is all about composition scheme. Already we have seen the tax advantages. There are advantages for the citizens also. Simpler tax, reduction in prices, uniform prices, transparency in taxation and increase in employment opportunities. Advantages to trade we have seen: reduction in multiplicity of taxes, mitigation of cascading or double taxation, more efficient neutralization of taxes especially for exports, development of common national market, simplified tax regime. And for advantages for the government means the unified common national market to boost the foreign investment and make in India concept, boost to the export and manufacturing activity, generation of more employment leading to reduced poverty and increased GDP. So uniform SGST and IGST rates to reduce the incentive for tax evasion, and reduction in compliance costs as no requirement of multiple record keeping, and improving overall investment climate in the country, which will benefit the development of all states. So now we have come to the important aspect. Keep your eyes and ears open, and this is all about the main concept of offsetting rules of GST, how to set off GST, how GST ITC adjustment new rules are made. Already we have seen whenever you make a purchase, input tax credit will be there for you. That means you pay GST, and that can be adjusted at the time of sales by you in any other transaction. At the time of sale, there will be purchase, that is you will purchase means you will pay tax. You will sell also, there is another circumstances you will sell, that is output tax it is called, and at that time you will collect GST, and it is a liability. That means whatever GST you are collecting, it is a liability for you to the government, and you have to repay to the government, otherwise it is 5 years jail, already I have told. So any amount that is paid earlier as GST, any amount that is paid earlier as GST on a purchase, that is input GST, will be set off at the time of next sale as output GST to another person. That means whenever you are making a purchase transaction, that is called input GST, you will get some input tax credit. That means why? Because you are paying some tax now, some 10 rupees now. This 10 rupees you can claim at a later stage whenever you are, this time you have purchased, sometimes you may sell. At that time what you will do, you will collect something, and you have to, whenever you collect something as tax, that you need to pay to the government immediately. But what you will do some adjustment. Already you have paid some tax to the government in the previous transaction at the time of purchase, that will be adjusted in this transaction at the time of sale, and remaining thing only you will pay to the government. That is called offsetting of GST. But there are certain rules governing this offsetting that you should learn. Thus only net GST will be paid by everyone. See here, the raw material provider, the manufacturer, the wholesale purchaser, and consumer. There are 4 components. 4 persons will be there. What raw material provider will do? He will only pay the GST that has been collected from the manufacturer. And what manufacturer will do? He will already has paid something to the raw material provider as GST, and he will collect something from the wholesale purchaser. The manufacturer will collect some GST from the wholesale purchaser, and what he will do, he will pay to the government. But entire thing what he has collected from this wholesale purchaser as tax will not be paid by the manufacturer to the government. What he will do, he will do some adjustment. Already he had paid something at the time of purchase of raw material, purchase from the raw material provider, that he will adjust, that he will deduct from the government's this thing, and the remaining part only he will pay to the government. Similarly, the wholesale purchaser also, he will sell the consumer the goods, and some tax he will collect. Say suppose if it is 100 rupees, that tax he will have to pay to the government, but he will not pay the entire 100 rupees to the government. What he will do, he has already purchased something from the manufacturer. At that time he had paid some 20 rupees as tax to the manufacturer. So that 20 rupees he will deduct it from the 100 rupees that he has collected, and he will pay only 80 rupees to the government. This is called claiming of input tax credit. What you will get input tax credit at the time of purchase, that will be set off with the output tax credit, that is the output tax liability, or the liability, in that you will offset it. But there are certain rules you have to remember. Only net GST only will be paying. Nobody will pay more to the government. Whatever he has paid already will be adjusted and will be paid. The only net GST will be paid by everyone except the last final consumer who cannot transfer it to the others. So the last consumer, he will pay the GST himself finally, and he cannot transfer it to other person because he himself is using it. So this is why it is called, GST is called destination based taxation. So GST is what based transaction? It is a destination based taxation. Similarly, raw material provider cannot offset his GST as he has paid no tax earlier. Here, raw material provider has no other previous transaction. If he has transaction, he can do it, offset his tax. As he is the first one transaction, he has to pay the tax whatever he has received from manufacturer. He will pay to the government. Okay. Then now coming into the different heads. Whenever there is a transaction happening at the time of purchase, there will be input IGST also, there will be input CGST, there will be input SGST. See, in the earlier transactions we have seen whenever you are selling one good from raw material provided to the manufacturer, here some 10% we have seen he has collected as CGST, 10% as SGST has collected. And this for manufacturer, this 10% whatever it is he has paid will be input CGST and input SGST. And if the transaction is from within the other states, from one state to another, then there will be input IGST if he pays the tax. So within the state they will pay CGST and SGST. If it is a transaction outside the state, then generally they will pay the IGST at the time of purchase. So this input can be offset with the output. Output means at the time of sale. At the time of sale, output will be there. At the time of purchase, this input will be there. Input tax credit will be adjusted. Input IGST will be, there will be preferences that will be observed. Whenever there is input IGST, that can be claimed at the time of output liability. Output IGST is there. First, that can be adjusted to the output. IGST will be adjusted to IGST only. Then, if at all IGST is not available, then it will be adjusted in any proportion with the CGST or SGST. There is no sequence. It can be either way. If CGST has to pay, that can be adjusted there. If SGST is there, that can be adjusted. Normally, sequentially, it will go like this. If there is input CGST, that means input credit is there, then it first adjustment should be made with CGST only. If CGST output is not there, then it should be adjusted to, second it should be adjusted to IGST. And under no circumstances, CGST cannot be adjusted to output SGST. Similarly, SGST cannot be adjusted, input SGST cannot be adjusted to output CGST. First, input SGST should be adjusted to output SGST because it is state government to state government. Then second comes the, if anything is left over, that will go to the IGST. And if anything left over, it should not go to the CGST. Under any circumstances, CGST and CGST and SGST, they won't exchange the input and output liabilities. Okay, these are the rules that you should understand. Whenever there is input IGST, it will go first adjust to the IGST. Then remaining thing among those two, any proportion, 50-50 or 40-60, it is up to you. That can be adjusted. And the input CGST, if it is there, then first it should adjust CGST, then comes the second one is IGST, then it will not be SGST. Under any circumstances, CGST should not be adjusted to SGST. Similarly, SGST should not be adjusted to CGST. Input SGST will be first adjusted to SGST, then comes second IGST. So first IGST credits needs to be utilized, then CGST credit should be utilized, then thereafter SGST credit should be utilized. This is the sequence. First this credit should be used, then CGST, then SGST. These are the rules. Now we will see some 5 examples so that you can understand clearly. The first example, how to set off the rules and how to set off the GST and GST ITC, that is input tax credit adjustment new rule. Say suppose one Amrit Industries of Andhra Pradesh, that means this industries, Amrit Industries is lying in Andhra Pradesh state. It purchases goods amounting to 20,000 in Andhra Pradesh. Say for example, this Amrit Industry is purchasing goods within the state. Some 20,000 it has purchased, and it sells goods to 30,000 in Andhra Pradesh. That is GST is 18%. Say for example, and here we have to adjust the CGST, IGST, and SGST. The first point is 20,000. It has purchased something 20,000. So the 20,000 18% means within the state means first CGST and SGST will be there 9% each. So here 20,000 into 9% at 2,700 rupees output GST is the liability. Already that output first 1800, sorry, 9 into 2 1800 is the input GST that you are getting. That means this Amrit Industry is paying 1800 as CGST and 1800 as SGST. So this can be utilized by Amrit Industries at the time of sale of any other goods other than this one, any other goods. At that time it can be, this 1800 can be adjusted. That is called adjustment of input tax credit at the time of output sale. Okay. Here in the second transaction it sold goods amounting to 30,000 in Andhra Pradesh. That means within the state it is earlier it has purchased something, now it is selling. So at the time of selling what happens, it will collect tax. How much it has collected? 18% GST means within the state means 9%, 9% it will collect. 9 into 30, 9% of 30,000 is 2,700. It is the tax collected from the other person, and this tax has to be credited to the government. And similarly 6 CGST 2,700 it has collected, SGST 9% 2,700 it has collected on 30,000. So this has to be adjusted. This 27,000 it has to pay to the state government. It has to pay to the central government, and 2,700 again to the state government. But already this Amrit Industries has paid CGST and SGST 1,800 each in the previous transaction. So finally net amount how much it will pay? Only 27,700 minus 1,800. So this CGST is adjusted first to the CGST as per the rule earlier we have seen. So 1,800 if you subtract 900 will be paid by the Amrit Industries to the central government as CGST. Only 900 will be paid in cash. Similarly, the output SGST is 2,700, and there is an input tax credit of SGST of 1,800. So that can be adjusted. SGST can be adjusted to SGST first, that we know. It should not be adjusted to this one. There is no IGST component as such, so it will be adjusted here only. 2,700 minus 1,800, 900, it will be paid as tax. So only the net tax will be paid. Already we have seen there is no credit remain. All the credit 1,800 has been utilized here, and there is no balance of credit that can be going forward for the next year. Say this is how the input tax credit is set off. Even in the post office environment also, that GST and SGST are levied on RPLI, PLI and many other taxes, speed post and all these things. In such a case also, whenever you collect taxes, you have to pay to the government. But whenever there is any service that you are providing, that you have purchased at that time, you are paying something, that should be adjusted, and the remaining thing only should be paid. That is called input tax credit, availing of input tax credit. This is seen very often in the audit. They raise objections that you have not availed the input tax credit, and that is a loss to the government. Simply you will pay whatever it is collected, and you will pay the tax to the customer. Say for example, if you purchase a computer from the vendor, you pay GST at that time. Generally that will be the input tax credit you may have to avail at the time of some sales. Say for example, in insurance you collect tax some 100 rupees, PLI and RPLI you collected some 100 rupees as tax, and while purchasing a computer you have paid some 50 rupees as tax. What you have to do, you have to adjust this 50 rupees under this 100 rupees, and you have to pay only 50 rupees. Audit people, they object. Why? Because you are paying 100 rupees here, and you are paying there, you are collecting 100 rupees and you are paying 100 rupees to the government, and you are not availing of the input tax credit that you have got at the time of sale of, at the time of purchase of a computer. So these all transactions has to be taken into consideration, and the tax should be paid accordingly. The net tax only you have to pay, otherwise objections will be raised. Second point, second example, Amrit Industries of Andhra Pradesh purchases goods for amounting 20,000 from Maharashtra. This time the state has changed. You have purchased from, Andhra Pradesh has purchased from Maharashtra. That means IGST comes into picture, and GST is 18%, and it's sold amounting 30,000 in Andhra Pradesh. So this is a different transaction, that is a different transaction. The first one is purchase, the second one is sale. The first one is purchase, here you will pay tax. Second one is sale, here you will collect tax. How much you will collect, how much you will pay, the net only you have to finally give it to the government. That is the point. Here 20,000 means CGST and IGST will not, CGST and SGST will not be there because it is an interstate transaction between the two states. IGST will come into picture. What is the IGST percentage? It will be 18% only. 18% of 20,000 will be 3,600. That will be put under the head input IGST. Input IGST you will have 3,600 because you have paid 3,600 to the government as IGST. This input tax credit as IGST can be claimed in a future transaction of sale as input tax credit. So here the second transaction is 30,000 sale. Whenever you sell something, you will collect tax. You have collected 18% GST, that is 9% SGST. This is sale within the state, so 9% of 30,000 it is 2,700. 9% of 30,000 it is 27,700 as GST and CGST respectively. So you have to pay 2,700 to the government. Already you have paid 3,600, so this can be adjusted here. From 3,600 you can adjust 2,700 here in CGST and 900 in SGST. Here for there is no output IGST to adjust first. We will see IGST should be adjusted in IGST first. There is no such adjustment required. So second comes the CGST or SGST, any proportion you can do. Here for example I am taking 2,700 is there liability, so I am taking 2,700. I am availing the credit of 2,700 from the 3,600. Remaining is 900 that I will avail for SGST, as IGST can be adjusted for SGST also in any proportion. So 2,700 and 2,700 it will be nil. There is no need to pay any CGST finally. And as far as SGST is concerned, from 2,700, 900 already input tax we have taken here. So the remaining will be 1,800. 1,800 you have to pay as SGST to the government finally as tax. So the credit remains, the remaining credit will be 0 for the next year, whatever it is. So the third example we will see, Amrit Industries of Andhra Pradesh purchase goods 20,000 within the state and sells the goods amounting 30,000 in other state. Transaction GST is 18% again. Here the first transaction is 20,000. 20,000 means within the state means there will be CGST and SGST 9% each, 1,800. And there is a sale transaction. That means there is output, that means output liability is there, that is you have to pay to the, you are collecting from the party and you have to pay to the government, you are collecting, so it is liability. And 30,000 it is IGST from Andhra Pradesh to Maharashtra means it is IGST state to interstate. So 30,000, 18% on 30,000 is 5,400 output IGST I got now. So this is collected, this is the collected from the party and you have to pay to the government in the sale process. So 5,400 we have taken here. Now we will see the adjustment part. In input IGST there is no input, so nothing can be adjusted. Similarly all these things also. And CGST we have 1,800 as credit already we have paid, so that can be adjusted from the 5,400. We will subtract 1,800 and so we will take this 1,800 here and SGST also we will take 1800 here. So this is comes to 3600. 5400 is the liability. So 5400 minus 3600, 1800 will be the final liability. This amount we will pay as cash as tax to the government. So the credit remains are nothing. So this is how the adjustment is made. And let us see the fourth example. Amrit Industries of Andhra Pradesh purchases goods amounting to 20,000 from Andhra Pradesh and 11,000 from Maharashtra. There is two transactions of purchases here. One purchase is 20,000 from Andhra Pradesh, so 20,000 GST is 18%, and 11,000 from Maharashtra, and it sold goods amounting to 18,000 in Andhra Pradesh and amounting to 12,000 in Maharashtra. GST is 18%. So two transactions are there. We will see. First one is 20,000 purchase means there you have to pay tax. How much? CGST 9% and SGST 9% on 20,000. That will be 1800 and 1800 respectively. That is the input tax credit for CGST and SGST. And 11,000 from Maharashtra. It is purchased from Maharashtra, so it is IGST will come into picture. IGST input tax will be 11,000 into 18%. 11 18s are 1980. That is the input IGST. Here now we have seen the input IGST also coming into picture. That means here purchase transaction has happened. So IGST input has come. And now coming into sales, 12,000 has been sold, 18,000 has been sold in Andhra Pradesh within the state. This Amrit Industries is in AP. So this sale is also in AP. So what will come? There will be CGST and IGST imposed, and their CGST and IGST that Amrit Industries has to pay to the government on collection from the party. So on how much he will collect from the party? 18,000 into 9%, that is 2160 as SGST as a CGST 1620 and SGST 1620 will be collected in the transaction of 18,000 into 9, 1620 within the state. And for Maharashtra, there some 12,000 is sold. So that means IGST will come into picture. IGST will be naturally 18%. 18% of 12,000 IGST output tax is 2160. That means this 2160 it has to pay to the government. But before paying, it can adjust something from here. So first we will adjust the sequentially. First we will adjust input IGST with the input IGST only. From 2160, 1980 can be adjusted from here. So the remaining 180 will be there. IGST we know first we have to adjust in IGST only. Then we can go for the CGST. So CGST 180 it is adjusted here. You can also adjust in SGST also if you want. Proportionate it is allowed. So I have adjusted here. So total amount is 2160. I have claimed the entire thing here. I have rounded off this IGST element here. This is closed and there is nothing balance as of now. Nothing is to be paid for as IGST. Now coming into output CGST, you have to pay 1620 to the government as you have collected 1620. And there is no IGST to adjust. There is CGST 1800 to adjust. So only 1620 is required. So how much you can do? 1620 you can do here, and 180 the remaining 1800 180 is there that you can adjust here in the IGST. Okay, because the only remaining thing the 1800 minus 180 it comes to 1620. So the 1620 is adjusted here, that is nil. There is nothing to be paid. Similarly, coming to the output SGST you have to pay 1620 to the government by Amrit Industries. But you can adjust something. Already this is adjusted. The SGST is 1800 and from 1800 you can have 1620 adjusted. Remaining is 180. This will remain as input tax credit for you in the next year or next transaction, whatever it is. Okay. This you can adjust next time whenever there is a transaction. Let us take another example. fifth example, Amrit Industries of Andhra Pradesh purchases goods amounting 20,000 from Andhra Pradesh and 15,000 from Maharashtra and sold goods 10,000 in Andhra Pradesh and amounting 15,000 in Gujarat. So GST is 18% again. Here 20,000 goods are purchased from the Andhra Pradesh only. So 9% CGST, 9% SGST will be the input tax. So 1800 is the input tax credit that will be availed because it has been from 1800 they have paid in the purchase transaction. Here this will be used at the time of sale transaction. So 15,000 they have purchased from Maharashtra. So what happens here? IGST come into picture. IGST, how much? 18% of 15,000. It will be the input tax, that is 2700. And now coming into sales transaction, 15,000, 10,000 is from Andhra Pradesh. So 9% of 10,000 is 900 CGST, 900 SGST. It will be levied, and it has to, this Amrit Industries will collect 900 and 900 in this 10,000 transaction, and it has to pay to the government. And 15,000 in Gujarat, that means from Andhra Pradesh it is selling to Gujarat. So IGST coming to picture. IGST, how much they have to pay? 18% of 15,000, that is the amount of IGST, that is 27,700 as output IGST that is to be paid to the government. So before paying to the government, Amrit Industries, what it does, it will check whether there is any input tax credit that is available already in the previous purchase transactions, and that will be adjusted. First off, there is input IGST 2700. Normally the IGST will be adjusted first to the output IGST. There is output IGST 2700 that should be paid to the government. Already some 2700 is paid, so that will be adjusted and nil should be paid. And output CGST 900 is there, and there is a input tax credit for CGST 1800. Out of the 1800, 900 can be adjusted here. Remaining 900 will pass over to the next year. Okay, next transaction it may be. Similarly, there is output GST of 900, but we have more credit 1800. Only 900 you can adjust here. Remaining 900 will pass on to the next year. This 900 you can avail in the next year. This 900 also you can avail in the CGST under next year. So this is how this setting of the GST is done. And finally, net GST only will be paid. No one will pay more than what it is required. This is how the GST takes place. And now coming to the registration part, persons liable for registration, already we have seen whenever the turnover is exceeding 20 lakhs, it is compulsory for the supplier to register himself under GST Act. And there are certain special category states, I mean to say, where the aggregate turnover is exceeding 10 lakhs, also they have to register under GST. Okay. And every person who on the day of immediately preceding the appointed day is registered or holds a license already if he is having a license, he should continue to have get it registered. Okay. Any taxable business he is making, then it should be registered, and whenever it is transferred, it should be transferred to the next person also, the registration also. Notwithstanding to anything contained in case of transfer pursuant to sanction of the stream or arrangement of amalgamation, in such a case also it has to be registered. These are important points for AO examination. And the aggregate turnover means all the supplies. It is not the profit, it is turnover. That means all the supplies will include in the turnover concept. If it is above 20 lakhs, compulsory GST registration has to happen. There are certain persons who are not liable for registration also. Those who are exclusively exempted are not liable to be taxed or exempted from tax, they are exempted. And especially the agriculturalist, to the extent of supply of produce out of cultivation of land, he is exempted from GST. This is very, very important. Who are exempted? Agriculturalist, to the extent of supply of produce out of cultivation of land. And sometimes the government may, on recommendations of the council, GST Council, by notification specify the category of persons who may exempt from obtaining the registration under the Act. And there are certain cases where the compulsory registration is to be done in certain cases. That is interstate transaction, taxable supply. Whenever there is a taxable supply, interstate transactions happens. In such a case, this compulsory registration is to be made. Casual taxable persons, they also have to make whenever they are making a taxable supply, that also comes under they also come under the registration. Casual taxable persons means those who are not residing in one specific place. Say for example, in exhibition, they conduct exhibition in Vijayawada, and these exhibition people, they come from some Gujarat or some Haryana or whatever other states. They will be for a specific period of time, and after that they don't conduct business here in AP. Such casual nature of persons for whom tax is to be paid, they are called casual taxable persons. They also have to have a compulsory registration, and in such a case also compulsory registration is to happen, should be taken. And persons who are required to pay tax under reverse charge, already we have seen certain cases there is a reverse charge that will happen. Legal charges and all those things, they have to pay the direct charges. Registration should happen in such a case also. And persons who are required to pay tax under subsection 5 of section 9, in such a case also. Non-residents taxable persons making taxable supply. Here casual taxable persons and non-resident taxable persons, in general they will be same, but only condition is that non-resident taxable persons also stay for a few days in one particular area, and they do not belong to that particular area, but they do business for certain time and they move to other parts. In such a case, they are called non-resident taxable persons, and they do business in certain areas. Such a case is called non-resident taxable. They may not be in India also sometimes. In such a case also, compulsory registration has to happen. Only for certain period only they will make transactions. Persons who are required to deduct under tax section 51, and persons who make taxable supply of goods and services also, they have to do. Input to service distributor, we have seen already distributor what role he will play. In such a case also separate registration has to be made. And sometimes there will be persons who will supply goods and services who are required. Electronic commerce operators, e-commerce operators will be there, who has to collect the taxes at source under section 52. Already I have told e-commerce operators, they have to have the compulsory registration. And every electronic commerce operator also has to register compulsory. And every person supplying online information and database access or retrieval services from place outside India to a person in India other than registration person, they also have to do this one. And apart from all these points, any other person or class of persons as may be notified by the government on recommendations of the council also, they may have to go for the compulsory registration of GST. So this is all about GST. I think you understood certain points on GST. This is this point, compulsory registration is important for AAO. And how do you like the video? Just post in the comment section. Please hit the subscribe button and do not forget to hit the bell icon so that you can be notified about my new videos we post on this channel. Thank you. For more marks and higher ranking, subscribe to Career Post. Thank you, one and all.